I'm holding my short positions overnight tonight, those same positions that I just accumulated yesterday. One of the big reasons, at least as of 2:16 in the afternoon, with 88% of the companies selling off and 81% of the volume selling off, meaning lower on the day, I'm willing to hold those positions. What do you think? You think I'm nuts? Specifically on the S&P 500, the SPX, at least as of 2:26 this afternoon. Here is what I believe is kind of my first and maybe most probable setup, and you can argue that it's already happening. My first target low on the S&P 500 is 5,100. You could argue that we hit it. I get it. We technically didn't, but you could absolutely argue that we hit it. I then say that we come up, have a little dead cat bounce. My dead cat bounce target, position number 2 there, about 5,275. We have also, at least as of 2:26 in the afternoon, come up to that dead cat bounce level. I'm then saying the next move is down to position number 3, my second target low, at way down at 4,785. So you can absolutely make the case that position number 1 and position number 2 have already been met, and possibly what happens next, the next big sell-off in position number 3. The other possibility that I'm seeing is more of a tighter sideways chop here for maybe a couple days between 5,480 and 5,300. You can make the argument that this possibility could still happen because, again, at least as of about 2:30 in the afternoon, yeah, we had not broken, we weren't closing below that low chop level. Let's see here we wind up at the end of the day. I guess technically both scenarios are still possible. I say the first primary scenario is even more possible. We'll see. Maybe I'm wrong. It was so interesting, though, earlier in the morning when stocks and the market here, the U.S. market, was down big, almost 7% down on the NASDAQ 100, and the market makers then came in and saved the market. They didn't want to trip the breakers today. They said, let's not deal with tripping the breakers today. They put a bottom in the stock market, and then what happens? The mom and pop investors, they see that little bottom and they say, ooh, this is the bottom. It goes up to brand new all-time highs from here, and they buy in. Just like I shared with you yesterday and just like came true today, be very careful. The big money center banks, these brokers, are using mom and pop buyers as those stocks to sell against them when they were buying yesterday. They're using mom and pop buyers as liquidity. I've spoken and emailed with many of you lately, and a lot of you are telling me that you are sick of the stock market manipulation. And I'm sorry to say, but it's the truth. The manipulation will never stop. So either stop investing and do something else, or learn how to put the market manipulation in your favor. I by no means am perfect, but I do a pretty good job at it. If you want to know more, reach out to me. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. On the NASDAQ 100 QQQ, we still have those confirmed breakdowns below $438 a share and $425 a share. We have a unconfirmed breakout from yesterday above about 462, but without confirmation, prices can absolutely come down. Be careful. If my videos are helping you, that's awesome. Please like the video, comment, and forward it on to somebody else that might need some help. If I'm sharing with you this stuff for free that's helping you, think how good the paid stuff is. Gold making brand new all-time highs again, at least as of about 2:23 this afternoon. Remember, this is a flight to quality play. If the stock market was healthy, if the economy was healthy, which they're not, gold would not be this high. So again, gold pressing higher tells me two things. Number one, to watch out below in the stock market and the economy. Number two, the whoosh down in selling is not here yet. That manic fear and selling in the market is not here yet. When it is here, you will see gold sell off. I've been doing these TikTok videos for 4 years now, and you need to know that every one of them builds on each other. It's not like you can come here once, watch a video, and understand. You have to know what's happening by watching all of the videos that I've done in the past. March consumer level inflation came in lower than expected here. CPI fell to 2.4, 1/10% below the expectation of 2.5, again for the month of March. Core CPI fell to 2.8, 0.2%, below the expected 3.0. Okay, that's the second straight monthly decline in that headline and core CPI. Inflation has cooled down despite the trade war. I've said lower inflation in a bear market and slowing economy is bearish. I have been right. I will continue to be right on that. Be careful. Tomorrow at 8:30 Eastern Time, before the bell, we get PPI. That's inflation data on the warehouse level, the wholesale level. If it again confirms that the economy is slowing, be careful, watch out below in the market.